Hey guys, Adam Rose, President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today's another episode of the Mortgage Guy podcast, and I kind of want to discuss housing crash, right? That could pop up in trending if you're searching for it, if I'm going to talk about this here today. So the reason I want to discuss a little bit is because, everything that's going on in the world, there's still a lot of talk about I need to wait, I need rates to drop, I need prices to drop, there's housing crash coming, there's a bubble. All this fun jazz, right? Which we've talked about it in the past, right? Done it a couple of times. So the question is, should you, as a home buyer, wait for a housing crash? Well, historically speaking, the answer is no, right? Historically speaking, you will lose if you're trying to time the market. People see high mortgage rates, the affordability crisis, some economic uncertainty because oil prices are so high right now, and gas is freaking out, and groceries are freaking out. Everything's so damn expensive. And so people ask themselves, hey, I need a place to live. Do I continue renting? Do I jump in the housing market? What does that look like for me? And a lot of people come up with this. I think there's a housing crash coming. I think I'm going to wait. I'm going to try to time the market. But the reality of all of it is we're not in 2008. 2008 and today is totally different. I mean, the primary difference is between the market now and the market then, specifically, is there was way too much inventory in 2008 mixed with some, I'm not going to say necessarily predatory lending, but programs that were just a little out there, right? I would say, irresponsible lending would be a better way to put it, in my opinion. So some of it you could classify as predatory because some people didn't disclose properly. So that's very possible, right? If you don't know what you get into, then yeah, it'd be considered predatory. But I would call it irresponsible. The ninja loans, no income, no jobs, no assets. Nina's, no income, no asset verification. I mean, that stuff's a little crazy. And the crazy thing is also with non-QM lending today, there are some similar style of programs. However, we still have to prove the ability to repay. Right? So there's different facets to it. Back then, there was no QM, qualified mortgage. There was no ATR with the ability to repay requirement for lenders. They kind of just went with their guts here and put some information into a file and went. So that's a big reason, right? That market was totally different. When you mix the irresponsible lending mixed with a rate increase, which, again, I know we're in a high-rate environment. What I'm saying is the teaser rates on those ARMs, those 5-year adjustables, those, no income, no asset, no job verification. So people thought, hey, the lender's going to give me money. I must be able to pay for it, right? So that is out today. With a mix of a lack of building between 2008 and 2019, we're talking about new construction, right? A lack of new inventory coming into the market for the mover-uppers to get into, all right, which creates a low supply because they don't have anywhere to go. You mix that with the high demand that we have and responsible lending, right? The 30-year fix is the most common loan program out there. We don't see necessarily a crash coming, right? You can call it a bubble all you want, and I'm sure there's going to be people on here arguing with me, hey, there is a bubble, this is why, and that's fine. That's fine. It's speculative. Everything's speculative, right? But the reason I say that is because we still have an inventory issue. Even though the spring market hit, inventory went up a little bit. In regards to the supply and demand issue that we have, it's still way off kilter here, right? It just is. The supply is way too low compared to the demand and the amount of people that are trying to buy and get into the housing market. But that supply and demand issue is truly the reason behind a non-crash occurring, you could say, right? You mix that with large investment groups buying up rental situations after the crash. People that were cash heavy went in, and it created this floor on the housing market here. So, and the thing is also the demand is not going to go anywhere, right? We talk about housing demand. People talk about, well, people don't want to buy right now because prices are too high, interest rates are too high. It just doesn't make sense. But people are constantly getting new jobs. People are constantly relocating. People are constantly downsizing because they've outgrown or getting elderly and they want to go to a 2-bedroom home or a ranch style home that's easier for maintenance and condos, stuff like that. People are outgrowing their homes. The demand is always going to be there. It's going to be impossible to erase the demand, right? We just got to find that nice equilibrium on the supply. So that's why I personally do not believe that we are in a housing bubble per se. Could you see house price corrections? Sure. The market naturally does it, doesn't it? When homes are overpriced, you will see it sit on the market. You will see $5,000 and $10,000 price cuts. You will see more negotiations. And that happens today still, right? I think some homes are still overpriced, and they will sit. Some that are priced correctly, they fly, and they go over the ass still, right? So we got to be careful on what we're wishing for, and it's been proven historically that the people that win out in these situations in the housing market are the people that get in and stay in, not the people that try to time it perfectly. In a perfect world, we would always love it if we got a nice little price dip mixed with a rate dip. That's a perfect world. But finding that equilibrium, finding that spot is extremely difficult. It's extremely difficult. As some clients have called me and said, I just had someone call me the other day, they were kicking themselves that they didn't buy a few years ago, right? Because the same house that they were looking at, I think it was in 22 when rates were starting to tick up, it had sold back then, and it was like $210,000. That same house, and they wanted it, but they're like, it's not really right. Rates are going up. I'm gonna wait a little bit because everybody was getting used to that 2.5-3% rate, right? And it started to creep up. I think it was in the 4s at that time when it was creeping up, and today that same house in that low 2s is selling for $300, and the rates are in the mid 6s. So he's kicking himself in the ass, and he was talking about that. So the cost of waiting is another thing that you have to consider. But everybody's situation is totally different. I just had a gentleman in here the other day whose rent is only $500 a month. You can't find that anywhere, right? But that's not normal in this market. The cost of rent has dramatically skyrocketed. It's insane. Some people are paying anywhere from $1,200, $1,500. Someone that lives just south of us is paying $1,800 a month. And it is a single-family home, so I got to give that to him. Single-family homes rent for hire, of course, because it's just like owning it. But yeah, so that's my opinion. That's why I just don't see this housing crash coming. So if you are on the fence, this video may not have helped you get over it, right? And it may not even be convincing. This is just my 2 cents on where I sit when I look at the housing market, what's going on in it, and what people say here and there, and snide comments, and some are factual based, some are just opinion based, some are just emotionally based, and this is just what I see. I'm in it every day. I'm looking at the market, what's going on, where are price points going, how long is our homes taking to sell, and again, I am micro focused. That's another thing that we have to look at here. You have to look at your specific market, right? I'm in Sydney. We are a big blue-collar community, okay? Per capita, in regards to the population size of this county, we're one of the biggest employers in the state of Ohio per capita based off of our size. That's crazy. Our manufacturing facilities are always quite strong in the labor market. It's quite resilient, okay? You don't see as much swing in our housing market as you may see in other places, in the Californias, the New Yorks, the Floridas. Some of the larger markets see bigger swings. So when you hear this, you hear news in general across the nation about housing markets. They are gauging mostly large metropolitan areas, where you will see the biggest swings. Okay, so when you're talking about housing market, you're talking about crashes, you're talking about all this stuff. You need to hyper focus in on your market that you are shopping in, because it does play a difference. Okay, I want you to take that into consideration. But in closing, guys, sorry I'm getting off my soapbox here. Cost of waiting, I believe personally, is a little too high or a little too risky, right? Because I'm not saying you couldn't time the market correctly. I'm just saying it's unlikely, okay? Very low probability of doing such. So what you got to figure out what that cost is. For example, if a house is $200,000 today, and I don't know, rates jump a point, but you got a $10,000 rate cut on the house, you just lost your savings, right? We don't know where the market is going to go. I was giving some advice to someone earlier today, and they just wanted a no BS assessment. And I said, hey, if you find the house that works for you, I highly suggest jumping on it. You can always try to refinance later when the market improves, because you may not find that house again that works for you. So I want you to think about that as well. But feel free to comment what you guys think about the housing market. Do you think there's going to be a crash? Do you not think there's going to be a crash? Do you think what I'm saying is, I don't know, sound, right? Commonsensical? Love to hear your thoughts. Play nice, all right? Remember to subscribe on YouTube. Check us out on Apple Podcasts and Spotify. We'll catch you all next week.